Roblox has only been trading for 3 days. I'll explain some key levels to keep your eyes out for in the coming weeks, but before we get into that, there's the closing bell, guys, with the S&Ps finishing up about 6 points. Today, we can clearly see the culprit, and that's coming out of the NASDAQ, down over 0.85%. We're seeing the rotation into the Russell up 0.75%, as well as the Dow up close to 1%. Now, looking how this week broke down, we take a look at the SPX. We're finishing right at the upper edge on the week, and that level was 39.42. We're actually closing a point higher than that, so we had 100 points of expected move. The options market just nailed this one to the T. We'll come back to this one later to discuss next week's expected move, but let's take a look at the NASDAQ. And taking a look at this NASDAQ, it was our worst index on the day. However, I do want to point out, look at this very light volume coming out of these futures. Not a lot of traders were trading them in today's session. Just taking a look, could this potentially be a dead cat bounce? Is technology going to continue to roll back over next week's tape? It's going to be very interesting to see how this trade breaks down, but we're seeing the rotation into the Russell. The Russell's actually putting a new all-time high in. However, the Russell's volume's not too shabby. It's a little bit better compared to other days in the Russell. However, the Russell's inching higher at 23.51. We also have the Dow today up 1%. Putting in fresh all-time highs with the Russell 2000. Let's take a closer look under the hood and see how our sectors broke down. And taking a look at this heat map here, we can see the technology sector is clearly in the red, down 0.8%. However, the Big Five actually doing worse than that, down 1.3%, and the Big Five consist of Microsoft, Apple, Google, Facebook, and Amazon. You can see how big these guys make in this pie, which is why I made an index on solely these 5 names. And they're down 1.3%, so it's putting a lot of stress on this marketplace. So there's other areas that are being picked up, and those areas, well, we see the financials today up 1%. Financials doing well. Even our industrials up 1.34%. It was our best performing sector, as well as healthcare up 0.2%. But you can see the smaller names are actually picking up the slack in today's tape, and those are largely in the Dow as well as the Russell. Just taking another look at these sectors, seeing the industrials lead the pack, financials right behind it. It's those growth names that are taking a beating today, with software down 0.5, tech 0.7, and Big Five 1.3. I wonder what's going on in the bond market. And taking a look at the 30-year bond, it's down 1.37%. A flush out today in these bonds. It tried to get a bid underneath it, just couldn't get going, and just seeing it capitulate in today's tape. What does that mean for our 10-year yield? Well, taking a look at this 10-year yield, the TNX is up 7%, sitting at a 1.63% yield. I want to zoom out a bit and take a look at it on a weekly. You can clearly see, are we going to be hovering in this 1.517 range? Or are we just going to blow right through it? There's a lot of price history right in this range, so I think this should put up a fight, as well as the psychological 2%, so we'll see how these trade. However, with the yield rising, it's going to tear apart a lot of these growth names. So if they can go sideways here, that's a great sign for these growth technology names, and they could be great bargains going forward, especially with a $1,400 check around the corner. However, when we take a look at the VIX futures today were down 3.75%. As for the VVIX, it's down a 1.14%, sitting at 111.5. Taking a look at it intraday, trying to get something going for it, but just looking hideous. Volatility continues to constrict. How is that going to carry over into next week's tape? And speaking of next week, let's take a look at the SPX and see what next week's move is. So we head on over to the trade tab and we look 7 days out. That's a week from today. $74.37 is our expected move for next week's session. We had 100 points this week. It's constricting by 26, but the VIX is falling, so it justifies that move. Let me draw these lines in, and I'll be right back. So coming into next week, we're expecting about 74 points. That upper edge is going to take us to 4,017. We would breach 4,000 if we're going to hit the upper edge in next week's session. However, if we're going to roll over, 38.68 plays our lower edge on the week. I think 39 is also a pretty solid level of support, probably about half standard deviation if we do see some selling. However, today we're seeing financials look good, we're seeing industrials look good. It's just those growth names that are taking a beating, largely due to the TNX rising over 7%. But keep these levels down for next week's tape. it's relatively tighter. However, the options market did such a great job in this week's session, we nailed it to just 1 point. Let's wrap it up, take a look at the dollar index, and see how the commodities broke down. And taking a look at the dollar index, it's up 23 basis points. However, just notice this wick here in the dollar. So it's sold back off intraday. What does that mean for our commodities? Well, taking a look at crude oil, it was down about 65 basis points. Very light volume here in crude. If crude can kind of hover the 65, that could be a good sign. I'm already noticing gas prices rise at my pump. However, they didn't go down when we were in the 30s. But as for gold, taking a look at gold, it's up 1 basis point on the day. Reverse of the dollar, you see that wick here. Gold sold off when the dollar strengthened, but the dollar weakened, and gold is finishing just flat on the day at $17.22. Bitcoin is just sucking the life out of gold. As for Bitcoin, Bitcoin's down 2% on the day. It's put in a new all-time high, and taking a look at it, how it traded, it's selling off right now. Over the weekend, I think if we can hold 53.5 to 54K, that would be a win in Bitcoin, in my opinion, if we can hold those levels over the weekend, mid 50Ks, because we want to consolidate in this area. There you have it for the stock market breakdown. With our indexes making all-time highs and very near to making all-time highs, it's been very hard lately being a bear. With $1,400 on the way, could retail give growth stocks a lift to go higher in next week's tape? And going into next week with just 74 points, don't expect much of a move. Now, sitting at all-time highs, you can't just expect to keep making all-time highs day after day after day. Consolidation in the market is also key. But enough of the macro, let's take a look at a trending ticker today, and that was Roblox. And Roblox today was down 5.68%. It has a market cap of $38.3 billion, and it's only been trading for 3 days, not even. So we don't have much data on this stock, and there's not even options trading on this yet, so we can't even look at what the options market can price in. So for that, we're going to look at some Fibonacci's. Now, I'll put these drawings up, and I'll explain how I got these. Well, Roblox had a reference price of around $45. With 550 million shares, that puts the valuation around $25 billion. So we're sitting at roughly 50% higher than where they valuated the company pre-hitting the stock exchange. So I used $45 as one of the points for my Fibonacci extensions. Now, just taking a look at these levels, you can see the 61% is a huge pivot line, and that number is 72.54, which we are below that line. The 78% fib is 67.24, and with a valuation at over $50 billion, I kind of expect this one to roll over a bit. Even volume is relatively light across the board, but there was a lot selling in the first hour of trade. Just taking a look at 2 days of trade, just see relatively quiet as well. We'll throw this on an hourly, and we'll see if we can find some better levels to look at. So if we want to roll over, a 25% drop would take us to 51.43. Now, I'm not expecting that. However, it is 50% higher than what it was pre-valuated at, but a lot of stocks are out of valuation, so we can't just use that as our sole reason to drop. If it wants to march higher, the lines to look out for are 72.54 and 76.51. This range is going to be a buffer zone. If we can break through that, this stock has legs to climb higher. Pivot points are going to be around 82 and 79. It will hit another resistance at the 38% fib. We have 2 of them here, and that's around $80 to 82.5. And ultimately, if we break back above 92, there'll be some FOMO, which we did hit that in the pre-market on the second day of trade. You can see it was hit at 4 in the morning. However, it didn't last long, and we're just kind of going sideways at 70. There you have it for the top trending stock, Roblox. I explained some key levels to keep your eyes out for. Are you buying? Are you selling Roblox in the coming days? I think it's a great buy, especially if it falls down a bit more. But other than that, if you've watched this far, hit the like button. It means a lot if you guys show some support and like my videos. And if you're watching me for the first time, I do these breakdowns daily. Show some love and hit that subscribe button. Any questions, comments, feedback, leave it down below. But on that note, have a great weekend, guys. I will see you on Monday. Take care. Peace!